Hi, everybody. My name is Chris Thomas, and I'm an instructor at the New York Institute of Finance, and I will be teaching in the Young Financial Scholar YFS program this coming summer. Planning is really important. I'm not saying all plans meet the test of reality. As a general once said, all battle plans come to an end the minute you get onto the battlefield. I've been in the financial services industry for about 35 years. Went to school undergrad at New York University, did my graduate work at Columbia University. $512.66 in final compounded interest is the principal amount times 1 plus the interest rate of 2.5% over 365. That's how often it's computed, times 1 year. I was attracted to finance because my father was an investor. He and I used to talk stock markets when I was in high school, even elementary school. And the key things that you have to know about an IPO are, first, there's this registration process. We've compiled and put together a curriculum that I think is really great for young people, high school to early college. And if I recall what I was trying to figure out in terms of what I wanted to do when I was younger, when I was in high school and college, I leaned towards finance because of my father's experiences, my mother's experiences, but that doesn't mean you're really certain about what you want to do. M&A, project finance, restructuring, which we talked about a little bit earlier, real estate finance, which is its own strange little sub-universe of the financial markets. The first good thing about YFS is it'll help you focus yourself on what you want to do. Is this really something what I want? And if you find out this is something you want to do, great. It's a great introductory program. It introduces you to some of the basic vocabulary, the basic concepts, and equities create wealth. Bonds, fixed income does not create wealth. Bonds and fixed income preserve wealth. However, if you decide, this really isn't my thing, it's still, I think, a great use of time because, we all deal with money. The minute you start selling assets to fund your lifestyle, it means you're spending too much money. Eventually, you have to make a decision. How much do I want to borrow? How much interest payments am I going to make? And is this really worth it? It's good to have a basic financial vocabulary because at some point, if everything goes great, you'll be a stock market investor or a bond investor or a private equity or venture capital or hedge fund investor if you're very successful. Are you taking advantage of tax advantage things like 401k? Are you thinking about tax minimization strategy? So it's great prep for something that whether you're in the industry or not, sooner or later you'll have to deal with your own financial situation, whether it's as simple as a 401k or if maybe you're super successful managing a significant amount of money, or maybe selling a company that you build at some point in the future and then selling that, and how do you manage it? The earlier you save, the more you've got. It's just mathematical. So again, I'm not saying be obsessed with retirement at 22 when you start working. What I am saying is think about it and try to have this plan, this roadmap that I talked about, because there are a few things that are inevitable in life, and aging is one of them. And taxes are one of them too. You don't escape aging and taxes. So having that basic vocabulary, that basic understanding of markets, it's key. So YFS is great as a form of guidance and as a form of early introduction to managing your own personal wealth. The people I've seen who've become very successful, who have large portfolios of stocks and real estate, who don't have to sell one in order to fund their lifestyle. These people have been disciplined spenders as well as disciplined savers. So I also, within the program, I kind of just touched on a couple of things that I'm involved in. I teach alternative investments, and alternative investments are hedge funds, private equity, both buyout and venture capital, to a lesser extent, private debt. So you have the target company, you have an advisory bank. The investment banks help on advice. They make suggestions to the buyout firm. They provide financing for the purchase. All of these people work together to do the leveraged buyout transaction. And so having a basic understanding of that, I think, lets you operate better in the economy. It gives you a sense of how things work. And I think it also introduces you to something that you might want to invest in at some point in the future, or maybe you want to become a venture capitalist yourself. So let's go into this and talk about it. And if there's questions, please feel free to interrupt. We're here to answer your questions and to help out. I actually found that a lot of the young folks who took the class were more active in terms of asking questions and questioning things than some of the adult people I teach in continuing ed classes, which I've been doing at New York Institute of Finance for about 8 or 9 years now. Now, this is wonderful. We have yet another question, which is great. So I'm looking forward to it. I hope this is useful to you, and I look forward to seeing you all this coming summer.